Salesforce just crushed Q2 FY27 consensus across the board. I mean, it was a blowout. Revenue came in at $11.35 billion.
Which beats the $11.32 billion estimate.
Right, yeah, up 11% year over year. But get this, the adjusted EPS hit a staggering $5.90.
Wow.
Yeah, completely shattering the $3.27 estimate. And management raised full-year revenue guidance to a range of $46.1 to $46.4 billion, lifted the EPS, too, to between $16 and $16.71.
Oh, man. So the stock must have just...
Oh, it surged. Yeah, nearly 14% in after-hours trading, breaking right through $234.
That is huge.
It really is. But, behind those massive headline numbers as well, a fundamental shift in how enterprise software actually works. So for this deep dive, we are going through the earnings report, the analyst notes, all the management commentary. Basically, we want to figure out if this aggressive AI pivot is actually making money or if it's just Wall Street hype masking a one-time windfall.
Right, because that is the defining question right now. I mean, the initial shock of those headline numbers is always fun for the market to digest. But what's really fascinating here is the underlying quality of the beat. Because let's be honest, that adjusted EPS of $5.90 it's wildly out of proportion to a standard software earnings beat.
Yeah, exactly. I mean, a mature SaaS company doesn't just, accidentally double its profits in a single quarter by selling a few extra CRM subscriptions. So what is actually hiding in that bottom line explosion?
Well, it's a vital distinction to make. About $2.6 billion of that is a pure mark-to-market strategic gain. It's tied to Salesforce's equity stake in Anthropic.
Oh, okay, so it's a paper gain.
Yeah, exactly. It heavily skews the final EPS figure.
Yeah.
But here's the critical part. Even when you strip out that AI portfolio windfall to look purely at the operating business, the core engine is still absolutely firing.
Okay, so if we take away the Anthropic cash, what actually proves the core software business is healthy? Like, what metrics are we looking at?
You have to look at the forward-looking indicators. Specifically, current remaining performance obligation, or CRPO. Think of CRPO as, like, future booked business that will be recognized as revenue in the next 12 months.
Right.
That metric accelerated to $33.5 billion, which is a 14% jump year over year. Meanwhile, their bread-and-butter subscription and support revenue hit $10.8 billion.
And they didn't have to sacrifice margins to get there either.
No.
Because their non-GAAP operating margin stayed incredibly strong at 34.1%.
Which translates directly to actual cash generation. Free cash flow is a major operational standout here, jumping 81% year over year to $1.1 billion.
That's incredible.
Yeah, it proves they aren't just coasting on accounting profits.
Yeah.
The software they're selling today is generating massive tangible cash.
So the core is healthy. But on the earnings call, management clearly wanted to talk about the future, heavily promoting this new Claude Force partnership. They are integrating Anthropic's Claude AI directly into their platform. But how is that actually working in practice? Is it just like a smart chat box for salespeople?
It's much deeper than that. They are running a dual engine strategy right now. Aggressive AI product execution combined with highly strategic M&A to feed that AI.
Oh, I see.
Yeah, so with Agentforce, Claude isn't just answering questions, it's running invisibly in the background. It's making decisions, updating records, triggering workflows, entirely without human intervention.
And here's where it gets really interesting for anyone tracking SaaS business models. Management noted that agentic work units, or AWUs, surged 97% quarter over quarter.
Oh, wow.
Yeah, to reach 3.2 billion.
That is a staggering number.
It really is. So if the old SaaS model was like renting a commercial kitchen to a human chef, this new Agentforce model is like charging the restaurant for every single meal the kitchen automatically cooks and serves itself.
That is a perfect analogy. Tracking work units instead of user seats is a massive shift.
Right.
They are successfully monetizing consumption and discrete AI tasks, not just selling human licenses.
Yeah.
But, to make an AI chef cook properly, it needs the right ingredients. It needs data.
Which explains the recent shopping spree.
Exactly. Their inorganic growth strategy is entirely about building a data moat for these AI agents. The recently integrated Informatica acquisition already contributed $440 million to that subscription revenue figure we discussed.
Oh, right.
And now, add the pending acquisitions of Contentful and Fin, which are slated to close in Q3.
So they aren't just buying random tech.
No, they are aggressively bolstering their data ecosystem. So their AI has the vast context it needs to execute those 3.2 billion tasks accurately.
But let's bring it back to reality for a second, because Wall Street wasn't entirely convinced before this print.
No, they weren't.
The primary risk hanging over Salesforce for the last few months was that all this Agentforce hype wasn't actually translating into larger, accelerating deal sizes.
Right. There was a very real fear that enterprise IT budgets were simply tapped out. Which brings us right back to why that 14% CRPO growth metric is the most critical number in the entire release.
Because it shows actual growth.
Yeah, when you see an acceleration in future booked business, combined with management raising full-year guidance, it effectively silences those monetization fears for now. The pipeline isn't just theoretical AI interest. It is converting into real signed contracts.
So if Salesforce is successfully pulling this off, transitioning from charging per human seat to charging per AI task, while holding a massive equity stake in the models powering those tasks, it raises a huge question.
It sure does.
If enterprise clients are paying for 3.2 billion automated AI tasks, how long until they realize they just don't need half the human sales team that used to sit in those expensive SaaS seats?
That is the big unknown.
Right, so it's a massive win for Salesforce's stock today, but maybe a quiet warning shot for the white-collar workforce tomorrow. Follow the show for daily earnings coverage.